In assignment 12, we begin to look at another set of ratios and look at what they mean to the company. These ratios are dealing with liquidity and solvency. Now, remember, when we talk about liquidity, what we're talking about is the ability of the company to pay its debts as they come due. So, the two ratios that we're going to look at there are our current ratio and our quick ratio. Now, as far as solvency, we're going to really look at two uh, ratios. One is debt to total assets. And so, again, what we're doing there is looking at the relationship of equity financing and debt financing of total assets. Um, the other ratio that we're going to look at here is a calculation of the times interest earned, but we're going to make the calculation on two methods. One is based upon an accrual amount of interest income that we'll find on the income statement, and then a cash basis amount of interest paid. And that one you'll probably have to find in the footnotes on additional disclosure for the statement of cash flows. Now, again, this is one of those assignments where you need to be extremely careful with the Excel worksheet. The Excel worksheet is going to provide the ratios that are then reviewed and compared on the Word documents. So be very careful with your information. Just to kind of go through the items here. Interest up at the top, you're going to see interest expense, tax expense, and income from continuing operations. Now, all of these will come off of the uh, statement of operations or income statement. Again, for the income from continuing operations, remember that this is income without um, extraordinary items and discontinued operations in it. So this is going to be net income. Now, the balance sheet items, really straightforward. When we talk about short term investments, the thing that I want you to remember is the company must have a caption on the balance sheet that says short term investments. Yeah, those are those investments that they plan to liquidate within the next 12 months. And there's some very stringent, uh, generally accepted accounting principles that tell a company what they can and cannot classify there. So be careful with picking up that item. Accounts receivable, pick up all the receivables, those not only from customers, but those also due from other individuals. Current assets, current liabilities, total liabilities, all come from the balance sheet. Now, current year and prior year will come from the most recent financial statements in Blackboard. 3 years ago, you're going to have to go back to the prior financial statements for the company to get those amounts. Those amounts are important because they also affect how the ratios are calculated. So you're going to have to be careful with those and pick them up properly. Cash flow comes from the cash flow statement, so all 3 years there. Now, interest paid on a cash basis, again, look for the supplemental disclosure information as it relates to the company and the actual interest that they paid out on a cash basis versus um, the uh, accrual basis that shows up on the income statement. Now, when we go to the Word document, um, same thing will hold true here. Uh, as it relates to the actual ratios that you bring over, if you make errors on the Excel spreadsheet, they're going to carry over to the Word document. I will not count those questions wrong twice. In other words, I'll count the errors that occur in the Excel worksheet. Now, where that does impact you, though, is your ability to answer the questions that tell you or ask you what do these ratios mean, and that's the reason it's so necessary for you to be careful with these worksheets. Uh, One of the questions I ask you is your opinion as to whether or not the corporation can meet their obligations as become due. Now, this is your opinion. It's not. I don't want you to quote what somebody says that the current ratio and the quick ratios tell you. I want you to look at the current ratio as it's calculated for the company and give me your opinion as to what the change in the uh, ratio means to the company. Also, look for what caused the change that has happened. Now, the next question is working capital. This is you're going to have to calculate this again yourself. Uh, if you don't remember what the how working capital is calculated, uh, go back and look it up in one of the research sources that I provided for you. Quick ratio, same thing as what I said about the current ratio and the changes in it and what occurred to it and what it means. Uh, Now, when we get to solvency, the first thing we look at is debt to total assets. Remember what we have done all semester when we talk about the relationship of debt and equity financing to a company. Um, and so be sure that you look at that and look at the reason for the changes that have occurred in that. Um, Times interest earned is, again, like I said, there's two calculations. One's the accrual basis, the other's cash basis. But what I really want you to do is the last question that asks you is what does times interest earned ratio measure for a company? Now, again, uh, probably you've not been exposed to this in any of your other classes. So go to some of the outside sources that are provided uh, to look up what this ratio means, how it operates, and what it tells investors. Um, and then look at that from a standpoint of the company and whether how that impacts your decision as to whether or not solvency is a problem for this company because solvency really relates to their ability to pay their debts, and those debts typically the biggest portion of the debt uh, are liabilities that they have. I don't guess I should say debts, but the liabilities that they have is in the form of notes payable and debt payable to sources outside of the company. And it's really those long-term liabilities that they have that this impacts or impacts solvency. So look at this very carefully. This is leading up to the last assignment that we have for the company, which is our last couple of assignments that we'll have for the company, uh, which is comparing it to its competitor, and then finally wrapping it all up and making some decisions about the company as to whether or not you would invest in it. So, as usual, uh, if you have any questions, please feel free to contact me, and good luck.